War can feel distant until it hits your wallet. A border is crossed, tanks roll in, and suddenly, your investments and savings are at risk. Global markets thrive on stability. War is the opposite. It injects uncertainty, disrupts supply chains, and sends investors scrambling. The shock is immediate. Stock markets plunge, retirement accounts shrink, and the value of your money feels less secure. In February 2022, Russia's invasion of Ukraine sent markets worldwide into a tailspin. Investors rushed to sell risky assets, fearing the unknown. The link between geopolitics and personal finance is real. Decisions made in distant war rooms can change the numbers in your bank account overnight. After the initial panic, markets swing wildly, with every new headline. Rallies on good news, sell-offs on threats of escalation. In today's world, we're not just observers. Our financial futures are tied to global events. Understanding this connection is the first step to protecting your money in an unpredictable world. The headlines aren't just news, they're signals that shape your financial reality. Let's explore how distant conflicts can shake your portfolio and what you can do about it. Picture the global economy as a web, every country, company, and consumer connected. When war erupts, it's like a stone thrown into that web. The shockwaves ripple everywhere. A conflict in an oil-rich region doesn't just affect local prices, it threatens global energy supplies, driving up costs for everyone. Disrupted supply chains mean factories can't get parts, food producers face shortages and prices rise. Hello, inflation. Investors react fast, selling off stocks in vulnerable sectors. Uncertainty kills confidence, and markets drop. Companies delay investments, hiring slows, and economic growth stalls. Governments add fuel to the fire with sanctions and trade restrictions, creating even more volatility. A single conflict can trigger a global economic slowdown, affecting everything from gas prices to grocery bills. That's why distant wars can rock your finances at home. August 1990, Saddam Hussein invades Kuwait. Oil markets panic. Iraq and Kuwait's oil vanishes from the market. Prices double in 2 months, hitting consumers and businesses worldwide. Higher energy costs ripple through the economy, manufacturing, shipping, even your electric bill. Consumers spend less, corporate profits shrink, and stock markets tumble. The S&P 500 drops nearly 17%. But markets crave certainty. When Operation Desert Storm begins, oil prices plunge 33% in a single day. The war's swift resolution restores confidence, and markets rebound. The lesson? Markets react to both the chaos of war and the clarity of its resolution. The Gulf War shows how quickly global events can impact your wallet, and how fast markets can recover when uncertainty fades. It's a blueprint for how conflict, commodities, and confidence collide. History repeats. Uncertainty drives fear, but clarity brings relief. Russia's 2022 invasion of Ukraine brought new twists to the old story. Commodity prices soared, natural gas in Europe hit record highs, wheat prices jumped 50%, and food security fears spread worldwide. Sanctions on Russia were unprecedented. Major banks were cut off, reserves frozen, and the global financial system became a weapon. Investors faced a new risk. Entire countries could be unplugged from the world economy overnight. Stock markets fell, but gold and the US dollar surged as investors sought safety. The US dollar became a global refuge, even as America led the response. The Ukraine conflict proved that economic warfare is as powerful as military action. Today's battlegrounds are financial and digital, not just physical. For investors, the lesson is clear. Modern geopolitical shocks are faster, broader, and more complex than ever. Your portfolio is exposed to risks that go far beyond oil and stocks. In crisis, investors run for cover, selling risky assets and seeking safety. Stocks, especially in vulnerable sectors, are dumped first. Corporate bonds with lower ratings follow. The goal shifts from making money to preserving it. Gold is the classic safe haven, valued for centuries as a store of wealth. US Treasury bonds are another favorite, backed by the world's most powerful government. Safe haven currencies like the US dollar, yen, and Swiss franc attract global capital during turmoil. That's why the dollar often strengthens in a crisis, even if the US is involved. The size and stability of US markets make them the world's default refuge. Understanding the difference between risk assets and safe havens is key to protecting your money. In uncertain times, knowing where to seek shelter can make all the difference. So, how do you protect your money when the world feels unstable? First, stay informed, but don't panic at every headline. Know which regions and commodities matter most. Diversify. Spread your investments across assets, regions, and industries. Don't put all your eggs in one basket. A conflict that hurts one investment might help another. Diversification is your best defense. Think long-term. Markets recover from crises. Selling in a panic locks in losses. Consider holding some safe haven assets like gold or government bonds as insurance. When risk assets fall, safe havens can cushion the blow. Build a resilient financial plan, one that can weather geopolitical storms. With the right strategy, you can navigate global uncertainty and protect your financial future.